Alrighty, well, we can get on started here because we were just hitting that time, and we got a heck of a week ahead of us. But do the usual stuff. I'll talk about some of the observations that were some of them pretty obvious through last week and what we're expecting this week. We got a very big week ahead of us to look for, so it's gonna be wild probably. So, but first, SPY, the market in general, this is demand destruction. This is no one wants this. I mean, you had this pathetic half day dip buy that couldn't hold itself. Going intraday, we had a little indecision day at the bottom here after our latest flush, and then we had a nice little strong day, and then that was it. And no one wanted it anymore. No one wanted to be the bag holder. It looked like this all over again. So, thankfully it was a Friday, so we didn't get to keep going. But serious volume too. Serious volume going into the close on these days, and that's telling. That tells you that there's some serious selling out there. It's not in every single stock, I suppose. Apple's doing okay, though we did start to see it a little on Friday. Some of the companies aren't doing huge amounts of volume, but Google is a good example. Their volume wasn't even, didn't even eclipse the last earnings. But there's selling. There's definite selling out there. It's not just retail selling. Obviously, this is broader selling, and that selling brought us down to the lows of the year in the SPY and even lower in the Qs technically. So we're breaking structure. We said we were going to reach new lows, and lo and behold, here we are. And there's no reason to think that this is done, that this is over by any means. We've gotten through the FANG gang, so we have gotten through kind of the biggest proportion of earnings last week, but there's still a lot of smaller companies and medium-sized companies that are reporting, and some larger companies as well. So I'll talk about those in a moment. But so Qs have broken. They're now, maybe I'm looking towards 306, a little bit of support, but really 300 is really going to be where you're hoping that you find the next level of potential defense. Not that I'd be buying in front of there anyway. This is just nonstop selling over the last couple of weeks. It was the worst month in the Nasdaq since the Lehman collapse. So we had some serious selling. Also, since they started collecting this data, which was 1973, it's only the third time ever in history where the S&P fell over 5% and U.S. Treasuries fell over more than 2%. So having the drop in everything across the board like that, it's only happened three times. Four times now. 1978, 1983, and 2008. 1978 and 83 is when we had all sorts of stagflation fun, and we had to have Volcker push us into a recession to reset things, and then 2008, well, yeah. So some people might look at that and be like, "Oh, great! So we've hit an extreme, a mean in terms of going down. So now we'll revert." If they want to jump on this grenade of a market, then feel free. We definitely could get a squeeze in here. It's possible. I'm not expecting that by any means with this destruction. Now we'll have to see where we open on Monday. Like if we open all the way down at like 400 or something, we'll have to see what happens in terms of gaps. Those can be tricky at times, but you can look at something like this where we really started falling out and gapped just too far. But even that, it only put in a temporary low. So you've got some serious nastiness out there. Headlines, I mean, it's the same story. PCE deflator, gross, it's highest since January 1982. Core PCE did drop a little bit, but inflation still there. We'll see if it's peaked, quote unquote. I know you get that narrative a lot, but with the insane horrendous backup that Shanghai ports are seeing, not sure that it's going away anytime soon necessarily. So got to keep that in mind. Also, we're expected to see, in terms of the Russia stuff, the potential NATO application from Sweden and Finland this month. I don't know if that's going to be, the first half of this month or the second half. We'll see. But that is definitely going to have escalation potential. Now, the market doesn't really react to Russian news that much anymore because it's largely priced in a lot of that until something new materially happens. The market is just going to be it's priced in expectations mostly accordingly. And you've got Russian Victory Day, quote unquote, where they're likely to try to declare victory next Monday, not this Monday. So these are all things that we have to keep in mind because, if that is actually when Putin wants to declare victory, this is going to be a nasty week in Ukraine for sure. But we'll have to, we're just going to have to continue to watch that. There's nothing more we can do about that. Sentiment out there continues to be terrible, both in the market and out. Consumer sentiment dropped again. Buying conditions dropped again for a new record low in terms of appliances, homes, cars. Inflation expectations rose again, highest since October of '81. So a lot of nastiness out there. And even if inflation is topping, which I'm not saying it is, the expectations are that it's not, and that's kind of it's almost more important because right now the consumer, and we've talked about this every day, but the consumer is kind of our backstop right now because they're spending voraciously. I mean, you look at all the card players' earnings. Visa did very well. American Express did very well. MasterCard did very well. The last consumer credit number was incredibly explosive, which is good and bad, I suppose. You know, so long as we can pay off those balances in a raising rate environment. But you've got massive amounts of consumer spending and retail spending. The credit cards are being swiped and opened and left and right. Now, the savings rate that we got from the PCE and some of the income numbers on Friday says that, you know, savings rates at the lowest it's been since December 2013, and this is the third straight month that our spending has outpaced our income because we're America. And so if that ever does hit the breaking point and we see the consumer then start to tie back and tighten the belt, and spending suddenly drops, there's nothing left in a positive spin about this market. Some people can say the jobs market, sure, and unemployment is technically very low, and that's a warning sign that we need to watch for. We'll see how that continues. The jobs market, in my opinion, has been broken for some time now, with the inverse between job openings and unemployed workers growing every month. We get that JOLTS report again this week, so that's going to be fun because people have been dropping out of the labor pool, and labor participation has absolutely imploded. So we'll have to see what happens, but those are going to be some of your first signs to look for. We're not pricing in a recession right now, so you know this is all just kind of, this isn't relevant this week, but it's something that we still need to prepare for, because when the market does start pricing in a recession and starts pricing in those issues, those are going to be the first things to look for. So we'll have to watch that. But that's most of kind of what's going on out there. Obviously, we need to listen if the EU ever does decide potentially this week, because there were rumblings about it last week about doing a full Russian oil and gas embargo, because that's going to cause some serious issues over there. Most likely, you have France, which I just saw a report that half of France's nuclear reactors are shut down right now because of maintenance defects. So that's great. Germany's, shut down all of their nuclear reactors because they've got some weird aversion to it. And so, meanwhile, a lot of those countries are very, very heavily reliant on Russian oil and gas. So, and the U.S. can't pick up that slack. So we'll see if that headline does come out, but things could get a little whippy if it does. And then also the market's starting to price in a 75 basis point rate hike expectation for June. If that does happen, it would be the first since '94. Now, obviously, this week we get our next meeting, our May Fed meeting, and so that's going to be all eyes are going to be on that. And we know what we're getting. We're getting the 50 basis point rate hike. They've said it time and time again. The Fed has telegraphed this to the market. They've written it in the sky in chemtrails, and they've done everything they can to tell the market you're getting a 50 basis point rate hike. What we don't know, and what we're going to be looking for, and as we get closer to Wednesday, we'll talk about it more, is are we going to get balance sheet adjustment? Is that going to be happening this month at the conclusion of the meeting, or is it going to possibly happen next month? It's insane to me that we haven't even touched the balance sheet, but then you look at people like Japan and the European Central Bank, who are still buying shit, and makes you feel a little better, I suppose. But our balance sheet hasn't been touched at this point. I think the Fed is desperately trying to rate hikes, not even to curb inflation because they can't really control it, but to have then something to cut when we need to have QE, because they'll have no other tools otherwise. So the Fed is in a tough spot, obviously. A lot of it's self-imposed. But, we're going to get them on Wednesday. We'll see if they talk about the future basis point hikes that we get in the following meetings. There is a press conference, so there is going to be some interesting stuff said, I'm sure. The market's going to be paying very much attention to that. If we do sell off into that, we may get a buy the news type event. It is very possible. I know Mike's looking for a buy the news type event in bonds because bonds have been dropping so hard and rates have been rising nonstop. We almost finished last week back up at the highs in the TNX. TYX is near the highs. We've seen this explosion at a rate, so I wouldn't be surprised if we got a buy the news type bounce in bonds. It wouldn't be a long-term bounce, obviously, with what the expectations are, but still, we could see we could see something like that after Wednesday, but we'll have to see what we get there. Other numbers we're getting this week: Monday, you got a lot of manufacturing numbers, ISM, PMI, construction spending. So we'll see if that stuff is kind of continuing. That's been mixed lately, so we'll see if that turns over or not. When Tuesday, we get my favorite JOLTS report, which is the job openings I was talking about, and the factory orders. Wednesday, international trades and goods, ISM services, and the services stuff is going to be interesting because the services sector is where you're seeing inflation really start to hit. It's possible that inflation's peaked in goods. It is not peaked in services. The last reports we've been getting have been the highest amount of input cost increases in services, the services sector, that we've ever seen since the data's at least started recording, and then also the highest amount of that cost being passed on to the consumer that we've ever seen. So I want to see if that continues because it's just kind of picking up here, or if that's going to start to peak as well. And then obviously we have the Fed Wednesday. Thursday we've got jobless claims, productivity costs, whatever. And then Friday we get the employment report. And like I said, jobs have been relatively stable where they are lately. And Friday we also get consumer credit, which I'd love to see because last month's consumer credit was, just absolutely astronomical. It eviscerated expectations in terms of how much consumer credit there was, both revolving and long term, in terms of like cars and student loans and such. So that's going to be a very interesting week. And then also we got one other thing this week. We got the official Russian default coming this week. I'm pretty sure that's Wednesday, but that's going to be a big deal. It's not going to be something that you'll probably see the effect of immediately, but I talked about this a little on Thursday or Friday, where that could be an issue for Russia. Some people, who knows what's going to happen, first of all, because Russia and China and India and Brazil, the whole BRIC group, could honestly just kind of circumvent this in their own way if they want. And international law is going to be really messy. But if they do technically hit that hard default, there's a lot of creditors out there who now are owed money, and that could slow down the amount of money that can then go into Russia if they find avenues to block that and demand payment. But we'll see. Like I said, it's not going to be something that'll happen overnight. Maybe the ruble drops. Ruble just had one of its best months since '93, I think. So it's it is what it is. But it's still going to be a very important event in the markets and in the world. It's going to be something to watch for as well. So it's going to be a wild week. And then this headline's not going to go anywhere most likely, but just to throw all the things on top, I saw someone saying that the first human case of avian flu was reported in the U.S. This weekend, because why not? So I know that actually kind of popped up in China, I think, like a week ago. So why not? I mean, we've already had, war and famine's coming, by the way. We've had pestilence, we've had war. Famine is on the way, most likely, considering, at least not in developed countries for the most part. There are already price hikes. Eggs have gone up, at 300% more. You've had some of the worst avian outbreaks in the U.S. ever. Farmers are having a lot of issues, but there's going to be developing countries. There's going to be food crises, but that's a little more forward-looking. But anyway, we've got all the four horsemen here, and it's a good time. But market doing its thing. Going back just to the levels here before I talk about some of the stocks and the sectors and the earnings coming up here. Obviously, if we do break, then you need to just start looking further back, because the Qs, if I compare here, Qs have gone negative since 2021, or at least they're right at the previous year's open here. So we're just turning negative from 2021. We've just finally erased last year's gains. We're still obviously well above the COVID breakout. You could argue, if we go from the breakout itself, we've just hit the 50% retracement in the Qs. It's kind of where we had that volume node we just hit. The SPY, meanwhile, is nowhere near their 2021 lows. Nowhere near the open in the SPY of 2021. So there is a lot more pain that we could see in the SPY. Tech has obviously been the underperformer. I think that's no surprise to anyone with the rates and with what we saw from Netflix and everything like that. The SPY is just hitting its COVID 50% retracement, almost closed at that to the T. So we've got a lot more pain that could come if we start pricing in recession, if we start doing this and that, and yada, yada, yada. So there's a lot to look for. It's a lot to keep track of. It's a very interesting time in the market, obviously. But going back to a more shorter term perspective for the week, if we do start breaking, I'm looking at 400 as support. If we do bounce, because maybe we've gotten a little oversold, maybe dip buyers come in, maybe Monday has low volume, and so since it would be a quiet, dull market, maybe we start trending higher. Who knows? I wouldn't expect us to go anywhere out of this range. If we did rebound, I wouldn't expect us to breach these highs. I'd expect a lower high. That's for the most part what we've been seeing. But I'll be looking to the Qs to kind of give indication of that, because they kind of lead us up and they lead us down due to the volatility and the nature of them right now. And then the IWM's dog shit. It's always been dog shit. It erased its 2021 gains long ago because it didn't have any 2021 gains to give. So small caps are small caps, and actually we're almost back to our COVID breakout point. So IWM's, it's crap. They're small companies. It's the small caps. So and reopening plays, they might be the better plays going forward when we do think we hit some support and bottoming, but we'll have to see. With what the consumer is experiencing right now, it's up in the air. It's up in the air. But anyway, taking a look. Oh, and also volatility. We got to watch the VIX because we are chugging here. We are putting in some serious bars on the VIX. We're really starting to see the short-dated puts get put on. And the more that short-dated puts get put on, the more worrisome about a squeeze you should be, in my opinion. A potential short squeeze. We kind of saw that Thursday, but it didn't last very long. But that does kind of happen. And look at these massive bars we've put in pretty quick succession. Even during these drops, we didn't really see that to the same extent. So a little different in terms of the massive amounts of options action that we're seeing here in one day, pretty consistently. So that's something that we need to watch. Make sure that volatility is also kind of confirming what we're seeing in the market. The VXN here, I mean, this is a little divergence. The tech options aren't quite picking up to the same degree, which I think is interesting. I don't know if there's any kind of trade in there necessarily, but it's something to monitor that VXN hasn't really kind of kept up with the Q's weakness. But it's something that I'm going to continue to watch. I'm going to watch that. I'm going to watch rates. I'm going to watch all the same indicators and leading indicators that we talk about every single day. So we'll see what we get there. Talking about some of the commodities, oil and gas, it's just chopping right now, and I think obviously a lot of movement in the near future is dependent on if we get a new Russian embargo embargo of Russian oil and gas. Obviously, if we don't, there's no reason still to think that oil and gas is going to go down significantly anytime soon, until even if the war does, quote unquote end this week or next week for some reason. It's not the end of it. They're not suddenly. We talked about this on Friday. They're not suddenly going to go, okay, you're done attacking and killing people. All right, yeah, we'll take off all the sanctions and we'll end this. No, this is going to continue for a little while. Doesn't mean oil's going to go to 200 or anything, but these are catalysts. It's a bit of support. There's more likely people are going to want to step in if they think that oil futures are getting to a discount at any point. So something to continue to watch, especially as we go into summer. The closer we get into summer, people are going to be traveling. It's going to be nice. We're already seeing it now. That has no reason to slow down unless we start having some real pain. Gold is in a pretty decent value zone, but the biggest reason, or that gold's been down here, is obviously the dollar. We've talked about this as well. Dollar has been an absolute monstrosity of strength, largely due to everything except for the ruble essentially becoming toilet paper relative to the dollar. I mean, the yuan has had one of its worst months ever. China's desperately trying to do their own QE and support their currency. Japan's currency is the yen is just crap right now because they're buying so much, trying to keep their rates low, that they're devaluing their currency at one of the fastest paces ever. The EU obviously getting absolutely smacked by the war. So the dollar's just had all of these kind of fundamental headwinds. Feels like we got a little hot up here, obviously. So this is kind of why I'm going to be watching gold, see maybe there's some play in here. But this is definitely going to be something that's interesting. It's cold, though, so it's like if you manage to catch it during a run, great. But if not, you're just going to be sitting there watching paint dry. So we'll see. And then crypto's crap. I say it every morning. Crypto's crap. It follows the market. It's stuck to the market. And it's, even if it wasn't this, and even if you look at this price action, you say this isn't, us trading with the market, it's making lower highs. It's stuck below 40,000 in Bitcoin. Ethereum's making new lows, and Ethereum's typically the leader in the crypto space, so it's below all of its moving averages. It just looks weak. And you did get a good crypto headline, but it didn't even move. Goldman did its first ever Bitcoin-backed loan. So an interesting headline, but something like that maybe last year would have sent crypto soaring. Now no one even looked at it. That's because crypto's a risk-on asset, and there's no risk on in this market right now. So that's all of your fun little commodities. Talking about some of the stocks that I'll be watching. I mean, we're gonna have a ton of earnings this week. We had Burke earnings on Saturday. I didn't even look at them, but Burke it had its momo run. It's actually kind of retracing now. The issue with Burke is that it's so heavily invested in Apple that I feel like those two will just kind of almost pair straight to an extent. But Burke had their earnings. Buffett didn't retire like people thought he would. They gave their statements and talked about their stuff, but yeah, you do have On Semiconductors on Monday, and then you have AMD Tuesday after the close. So we're still getting some of those semi players, and the reason I say that is because the semis have been actually some pretty weak. Intel had earnings that sent them back to lows here, and this is a pretty significant level that they're at here, where this is significant support on Intel here that we just dropped down to. And if we drop this, I mean, you've got more pain below you. You can go to maybe 38, you can go to the 200-day. Intel, this chart looks disgusting. And most of the semis are that way. MU sitting at vital key support here. We break this. I mean, where are we going? AMD, same kind of deal. Actually, AMD's already broken. This looks like a very quick head and shoulders that's now broken. So you've got some free fall room below us. I mean, look how extended we also got. It's not really surprising. And even NVIDIA, look at that monthly bar in NVIDIA. Holy shit, that is a monthly bar on NVIDIA. That's gross. That's gross. That tells you that no one wants this poor stock. So right now, at least, obviously we like it as a company, but just right now with raising rates, with the supply chain constraints, you're going to get some more earnings this week. We'll see where that sector goes, but it's definitely a sector to watch. You get a lot of reopening plays reporting earnings this week, which could be interesting. This PK, which I know Mo likes, which has been sitting up here. Expedia reports Monday after the close. MGM, which is reopening for the most part. So you get a lot of plays like that reporting this week. So that could be interesting. Mosaic reports Monday after the close. Very curious about this one. It's the fertilizer player. We've talked about fertilizer and the impact of the Russian war on fertilizer in the world. So I think this one could be definitely one to watch Monday after the close. You'll get some others like Big C, Chegg, Clorox reports Monday after the close. I'm just curious how terrible they do, considering how terribly they've been since the COVID's kind of gone away. You get a lot more big biotech and pharma companies, BIIB, a couple like that. Starbucks reports Tuesday after the close, and Michael joked earlier, I got my nice unionized tea here. So yeah, I'm curious. We haven't heard anything from that lately. They hired their old CEO because they're having those union issues, and he's a very avid union buster. But they're having issues, and we've actually started hearing that from Apple too. Amazon had their first place unionized. Apple starting to get union applications. So some of these companies definitely start to feel that pinch. And Apple's obviously watch Apple and Tesla. They're still market generals for a reason. Tesla's stuck below the 200-day, couldn't hold above the 200-day. That's not a good sign. Likely going to start to feel that pain as it comes back down. And Apple really closed below the 200-day. Apple hasn't really handily been below the 200-day for more than a day on a trickle like this since COVID. So if I zoom out a little further, there we go. Yeah, hasn't. And even then, this is how long we spent below the 200-day in Apple during the COVID drop. That's it. Just a couple days, a week or two, and then it just resumed its way. So we haven't seen that kind of mean reversion from the mean in quite a while in terms of on the downside on Apple. So it's definitely one to watch because this is the institutional safe haven. And if Apple starts getting hit, then you could start to see some institutions start to move some money around. I mean, Netflix is a great example. Look at the volume it did, just nonstop demand destruction. You had serious selling, institutional selling in Netflix after their earnings. Amazon completely shit the bed on earnings. Definitely seeing some of the same stuff there. It is Amazon, so obviously it's not like this company's going away anytime soon, but who would look at, this and look at their first loss since 2015 and some of the shit that they reported for their guidance and be like, oh yeah, this is a buy. This is a buy right here. So until people think, yeah, now we're at value and there's no more pain ahead, I don't see long-term buying stepping in personally, but we'll have to see. We also get Airbnb on Tuesday. You get CVS on Wednesday. You get some more EV plays I can't even remember which ones they are, but there are a couple this week. You get Uber. So again, we're getting more just reopening plays and quote unquote value plays this week. Some more insurance plays, and insurance has done terribly. Progressive dropping after their earnings. Aflac had a terrible drop. Look at that drop after their earnings. And I think part of Burke's earnings, Burke actually, if I'm not mistaken, missed pretty substantially on earnings. And I think a big part of it was their insurance sector. I'm fairly certain that they had to get their, I think they own Geico, and that guy had to come out and explain why they're doing so terribly. So there's definitely some issues in the insurance sector right now on that one. There's going to be plenty of other plays this week in terms of earnings. I'll list them every morning as we go through and as we approach. But you've got Zillow. See what Zillow's doing. They've been imploding ever since they tried to have algos buy housing, and that went as well as you'd think. You'll have a lot of stuff like that. Paramount reports, that could be fun to watch, especially after Netflix's earnings debacle. Pizza, a lot. Booking, yeah. So there's a lot. There's a lot of energy companies reopening plays. There's some semis, some healthcare. You're getting a little bit of everything, and it's definitely time to continue to watch these earnings because we're seeing, and Mike's talked about this, even earnings that are beating, and there are actually a decent amount of companies that are still beating for this quarter. They're finishing down still. They're finishing red, and that either could be due to poor guidance, or it could just be due to a couple of them, aren't necessarily reaching the growth earnings potential that the stock price has been, reflecting for a lot of these companies, and also some people are just taking the earnings as an excuse to sell. So it's something to watch. Qualcomm's a great example of that. Qualcomm had great earnings. They had great earnings last week. And look at the volume drop off. These guys, you had a nice big seller, and we talked about it yesterday or Friday. Nice big seller here in the morning at Qualcomm. They couldn't get over it. There was no big buyer there. The volume was anemic for the first half of the day, and that's just very telling. The day after good earnings, that there's just no one stepping in there. Obviously, Meta is one that's actually still held up after their earnings, so they're failing their 50 or 250 day. They didn't even have stellar earnings. I think they're just so beat down and abused and cheap, quote unquote, from a PE value that that's what we're seeing there. So I'm definitely going to keep watching the weak sectors. Comcast was an easy layup this week. Because this sector, this is just a great example of looking at a sector like communications, which all year has just been dog shit and has just been getting crushed. You look at Verizon. Look at Verizon. I mean, sadly I missed Verizon on Friday. I didn't even see what was going on with that one. But these stocks are getting obliterated. And so when Comcast reported shit earnings, it was just a great follow through trade because it's a terrible weak sector that is just has been selling every pop. And Cisco's doing the same kind of thing. Cisco's breaking for new lows. This may be a catch-up play on the way down. Who knows? AT&T is now dropping, even though they just did their spinoff. So you got definitely destruction there. That's the kind of sector and stuff that I'm looking at. China Play's got a small pop on Friday, but even then, they're still selling these back off. They're still getting smacked back down. So there's not much out there that I think is valuable and worth buying. Even the defensive plays, and I noted this on Friday. Look at XLU. This is supposed to be the safety trade. The defensive plays when the market in a bear market, XLU got obliterated on Friday. And when you see them sell everything, that's when you know it's broader selling and not market rotation. If it's market rotation, you'll see XLU, XLP, maybe you'll see financials or energy going up. Energy may not drop just because of what oil does, but we'll see. Those companies have so much free cash flow that ExxonMobil tripled their buybacks, and you're seeing stuff like that. But if you see all of these sectors sell off like this, it tells you that there's demand destruction, that there's definitely people getting out, whether it's due to margin calls to protect other positions or what. I don't know, but it's just it's nasty. There's no real reason to feel bullish necessarily unless you're looking for a buy the news type event for like a 1 day bounce or something. But even then, I'm not super excited about it in terms of trying to buy. But there are still stocks out there that are have given good returns when they do run, and I'm not saying for short-term perspectives there's not good buys, but the money's definitely been on the downside. And even the previous winners, AbbVie, monster this year, missed on earnings, great play on the short side. Costco's even starting to get hit. It's Costco. Costco hasn't ticked down in like 2 years, I feel like, and now it's actually starting to get hit. Dollar and a quarter tree hasn't crossed the 50-day. Maybe this is the catch-up play. I don't know, but there's going to be a lot of stuff out there that's out of whack, and there's going to be some good action. So we'll see what we get every day, but that's the 30-minute blitz of just the short-term perspective, the long-term perspective. There's headlines, there's sentiment that we have to juggle. There's a lot going on. It's a wild time. This is definitely not the last 2 years where things were kind of laissez-faire and quiet. And, you had to pay attention to a couple of things here and there, but other than that, it was just we're just kind of trading and chilling. Now it's now we're kind of in a little bit of go time right now because of everything that's happening. It's gonna be a fun week though, but that's gonna be it for the weekly prep. So